That time of year that everybody dreads because everybody dreads two things in life the most. That's death and that is taxes. And when April comes around, that means tax day is coming around as well. So if you've not already filed, then we are got you covered on what you need to do to make sure that you make that deadline. And if you miss it, what you need to do there as well. To join me to talk about this is Martin Davidoff. Martin, thank you so much for joining us here. This is a time of year where you probably don't get any sleep.
You're right about that. I get a little bit, but enough.
One of my friends, they own their own tax law firm as well, and I can't get her to do anything this time of year. She's like, after April 15th, she'll come out and play. Because this is the time of year, a lot of times, too, people might be ahead of getting their taxes, but how often do you think people file their taxes ahead of the deadline?
Well, people start filing in January to get their refunds because they need the money. They're going to go out and buy cars and get savings. So there are a lot of people filing early, and kind of cliffs up until you get to the deadline. Then a whole bunch are filing at the deadline, and they're more on extension.
Okay,
you can get an extension of time to file.
Mine probably will make it right on the deadline. That's probably where I'm going to be this year. But what are some of the first things when it comes to filing for those that are still out there and trying to do this? What are the first things that they really need to prepare for with their taxes? Because I'm still gathering. I got the documents from the government. I got the things from work. But I know there's a whole list of other stuff that I owe my tax attorney before they can actually put everything through.
Well, you hit one of the three items. You got to gather all your documents. But the very first thing that most people have to do this year is decide who's going to prepare the tax return. Are you going to prepare it yourself? Are you going to use a CPA, an enrolled agent, or one of the tax firms that are out there? And in this particular year, it's probably more important to use a professional because there are so many new deductions. And the other thing, the third thing that I would say, in addition to gathering your information and deciding who's going to prepare your tax return, is to set up an online account with the IRS. By setting up an online account, you can get information about your refunds, about how much income has been reported by third parties for you. And there's one other thing that a lot of people are not doing, and that is getting an IP PIN, an identity PIN from the IRS, so that you can't be in identity PIN hell in case your identity gets stolen, which right now there's a 400,000 taxpayer backlog who are waiting up to 22 months with unresolved issues on the tax returns when their identity got stolen. So I encourage people, it's very easy to get. It takes 5 minutes. You go online, you get from your online account, and you get yourself an IP PIN.
There's a lot of people after gathering their taxes, they still might need more time. What is the trick when it comes to filing for an extension, or if they just don't have the money to pay for what they owe?
Well, there are two things. If you have all your information, and you don't have the money, file your return. The IRS will work out an installment agreement with you. You can usually do it online. If you have money that you can't fully pay, and then you may need a tax professional, a tax resolution professional to assist you. As far as having the money but not being able to file on time because you need more information, you can file an extension. You pay an estimate of what you owe, and if that estimate is low, you're going to have to pay interest at 7% per year. And if it's under 90% of your tax, you're also going to have to pay a late payment penalty. But make sure you file that extension, because if you don't file the extension, you're paying a 5% per month late filing penalty, which can get very expensive.
This is a time where the economy, a lot of people are feeling really stretched, and resources, they might not have as much as they did before because of where things stand. What if they don't have enough money to pay their taxes? What are some ways around this?
Well, you can get into an installment agreement, and if you truly don't have the money, firms like us, well, I'm a tax, I deal with controversy with the IRS and helping people get peace of mind. And the key is to read the IRS mail when they start sending you collection notices. And there are many alternatives. You can do an offer and compromise. You can get into a partial pay installment agreement, a full pay installment agreement, or get into what is called currently not collectible, where they put you into currently not collectible for the time being and see if you can pay in the 10 years that they have to collect.
Okay. And then, a lot of people, too, I think it's a little bit of a time where you feel under the Trump administration, the big, beautiful bill, that there's a lot of changes to some of the tax laws. What do we need to know with that might apply for this filing of taxes?
Well, for this year, you now have the higher deduction for state and local income taxes. So a married couple who always would take the standard deduction may be able to itemize their deductions with their charity, their medical, their interest, and now they can deduct real estate taxes and income taxes up to $40,000, whereas before it was limited to 10,000. So that's a big thing. Seniors, and the big thing is don't forget to take deductions that you're entitled to. The child care credit is higher, the standard deduction is higher, but also you can get deductions above the line. Interest on an American car that you may have purchased in 2025. R&D credits for businesses are different. Make sure you're taking the qualified business income deduction for businesses. It's a 20% deduction. And what you're finding is this year, with all these deductions that people are taking and the no tax on tips and the no tax on overtime, which is not really no tax, but it's no income tax. They're still paying payroll taxes. And all of these phase out, which is why you need a professional. So, these are all bigger things. But the bottom line is people are getting bigger refunds. And the reason they're getting bigger refunds in these tight times is because they changed the law to save taxes, but they kept the withholding the same, in order to, I think, to make people happy when they got refunds. Refunds are up almost 11%.
I will like that when it comes around. And what people tend to do with that, you mentioned go buy cars, maybe go on vacations. But there's a lot of people out there that they have their individual taxes, but they also maybe have a business. I have my own LLC. What kind of tax breaks and might be changing in the laws when it comes to those that have their own businesses?
Well, they've made depreciation a little bit more generous. Also, as I indicated just a tad before, if you have a business that has research and development costs, you can now deduct those costs rather than spreading them out over a number of years. The business advantages from the 2017 law are now permanent, many of them, like the 20% qualified business income deduction. But the biggest thing about businesses is to really keep good records. The biggest errors we see is people don't keep sufficient records. They don't know how much money they made. They don't know their deductions. They're not keeping them in an organized way. And even though the taxes are complicated, what makes them even impossible in small businesses is a very poor record keeping. So find somebody who's going to help you put your records together.
That's where it makes me want to pull my hair out sometimes. And that's why you say you go and get a professional to kind of help you through this. We've talked a lot about the taxes individually and business-wise, but this is a time of year too where a lot of people are gambling, March Madness. And if you get payouts from that, what are some of the tax laws if you become a big winner and you're enjoying the March Madness and getting the payout that apply to that?
Well, you see, with today's March Madness, I'm wearing my basketball tie.
I like it. Okay, what team is that representing?
It's just generic.
Okay.
So we love all basketball, but orange might be the Orangemen from Syracuse who are not in this year's dance. In any event, but basically, gambling, and as most income, is taxable. If you have winnings on gambling, you have to pay tax on it. Now, the interesting thing, if you bet on basketball games last weekend and you won, and you bet on basketball games this weekend and you lost, you can't offset the losses against the winnings. The winnings get reported what is called above the line, and the losses only get reported if you itemize your deductions. And nearly 90% of the people do not itemize their deductions. So a lot of people, smaller gamblers, are not getting the benefit of these laws. And the idea is that Congress should just allow offsets, but that's not the law right now.
When it comes to just maybe making big mistakes, we happens all the time on TV. When it comes to making some of the mistakes, what are the biggest things that people fall into on their tax returns?
Well, one of the ones that's most harmful is they put the wrong bank account number on their direct deposit information, and their refund goes somewhere else. And you got to really check if you have a preparer. Check, especially a new preparer. Check to make sure they put the right account number and the right bank and all the right numbers on your tax return, because that's a huge mistake. And again, sometimes you can't get the money back. Choosing the correct filing status, especially if you're, recently divorced or separated, there are complicated things about the deductions and the exemptions for children. Forgetting to take, deductions and credits, forgetting to take the new senior tax deduction of $6,000 for single, $12,000 for joint, forgetting to take that. Not taking your child care credit. 5 million people don't take their earned income credits. So there are a lot of things that people are not taking, and those are mistakes. The other thing is not reporting income. Let's say you got stock options and you didn't report the sale of those options through the brokerage account, even though they're usually almost non-taxable because they got included in your W-2. People forget to report that, and then the IRS sends them a notice. And the other thing is when the IRS sends you a notice, read it. And if you don't understand it, go have a consultation with a professional to do that.
How often do you find that people might get audited, and kind of what goes into the decision that they might be?
Well, audits are very low historically. I mean, bigger companies, Fortune 500, might be audited all the time, whereas wealthy individuals might be 6 to 10% of their wealth are being audited. People in lower income probably 1% or 2% at most. And when you get that dreaded letter, read it carefully. If you understand it, sometimes, I would definitely go to a tax professional. And the tax professional is not always the person who prepares your tax return. Going to the CPA for a controversy with the IRS is like going to your family physician when you need heart surgery. There are people who are specialists that you should be going to, like my department at Prager Metis. All we do is tax controversy. So that's who you should go to if you have a problem and talk about it. And basically, it's reading the letters carefully, responding appropriately. In most cases, people can get those issues resolved. But if you forgot to report something on your tax return, you need to deal with the IRS. And if the IRS ever sends you, hey, you got to go to tax court, a lot of people just write them a letter, say, oh, but I was right. Well, no. File a petition to tax court. Most people do it individually without professionals. It's very easy to do, and that protects your rights.
Do you ever find that there's always those people that try to sneak away with reporting some of their income? How often are they ever successful? Because there's too many that often end up having to, pay a heavy price for trying to get away with something that they shouldn't.
Well, unfortunately, I think, they get away with it often. If people are receiving cash that's not third-party reported, it's, hard for the IRS to audit everybody, especially when the IRS budgets are cut down. So I think a lot of people do get away with it, and a lot of people don't even think they're supposed. A lot of people just lack of knowledge. How many people are betting, reporting their gambling winnings when they're not getting a notice that the IRS knows about their gambling winnings? So if people are on these online gambling sites and they're winning money, or they're probably not reporting because the IRS is not getting reports on it, and the IRS doesn't have enough people to audit you.
Okay. Anything else you'd like to add as we're gearing up towards the deadline for tax season?
Just, make sure you file your extension. If you need one, file on time. If you're using Prepare, make sure you get from the Prepare, that they actually electronically filed. And, just be diligent and do a favor to your Prepare. Get your information in as early as you can, because between April 10th and April 15th, they're going to go bananas.
Probably. Martin, thanks so much for joining us and for your patience as well. I know we had a few technical difficulties going on here, but we appreciate that. We're glad to have you on, and I know you're a busy man this time of year, so we'll let you get back to however you choose to spend your Sundays. And we'll be back here on Fox 5 Weekend Live in just a few minutes.